Good morning, everyone. This is Tony Butler with Insurance Agency Marketing Services. I'm one of the life sales directors here, and want to thank you guys for jumping on our webinar today. Actually, the last life webinar of 2020. I do have Kip Walker with Mutual Trust Life on the line. Kip, you there?
I'm here, sir.
Okay. Can you see my screen okay?
Sorry. Yes, I can.
Okay, awesome. Today's webinar, we're going to discuss Mutual Trust Life, whole life product. Again, I want to thank everybody for attending. I'm sure after the holidays, everyone's busy and trying to close out 2020 on a strong note and get a jump start on 2021. So we're going to try and help you get there. So before we get started on the webinar, I want to bring up a few things that we provide here at Insurance Agency Marketing Services. If you are a new producer, we do offer you the ability to earn perks, if you will, to contribute to your business based on a production that you generate. As you see here, there's a few different levels of premium that you can generate that can get you anything from a 1,500 piece postcard mailing all the way up to Ritz-Carlton package. If you're looking for a gift card, that's available, as well as some additional perks as far as social media campaign, things like that. So if you have any questions at all regarding our new producers builders, please reach out to one of your sales directors and they'd be more than happy to answer any questions that you may have. We also like to provide bonuses for those agents that provide us with referrals, meaning if you are an agent and you're appointed with any of the carriers that we work with and you refer another agent, if that agent gets appointed with any of the carriers that we partner with, we do provide you with a $50 one-time bonus for the referral. Once they do submit business, there is additional money that's available for you on that business that they submit going forward. So if you have any questions regarding our IAMS business builders, again, please reach out to your sales director. I'd be more than happy to talk to you about that in greater detail. We also offer you back office support, and under 2020's current environment with COVID, I would have to say that one thing that separates us apart from other agencies is our back office support. We like to say we help you from submission to commissions. So what that means is we want you to work smarter, not harder. So we're providing you with paperless contracting, assistance as far as life and annuity quotes, case design assistance. So please do not hesitate to reach out to us for any help that you may need. With that, I mentioned COVID, and agents are finding it extremely difficult to get in front of clients right now. So we do offer a couple of platforms that allows you the ability to actually do paperless applications, or e-apps, so to speak. One of the platforms is Firelight. And as you see here with Firelight, the carriers that are available currently on Firelight are here on the left. The carriers that are coming soon are listed on the right. The majority of the carriers, as you see, are annuity carriers, but you do have the ability to do e-apps. If you need assistance with getting registered for Firelight, give us a call here at 800-255-5055. Be happy to walk you through that process. We also like to provide you with creative marketing solutions, whether it be turnkey agency or digital solutions. What we're finding now is with COVID, it's changing the game in terms of how agents are marketing their business, how they're getting in front of their clients. So we can help you with whether it be handouts, you're looking for website assistance, logo design, redesigning your logo. I would strongly encourage that you reach out to your sales director and allow us to do a marketing analysis for you. This is a comprehensive drill down that we do to get a look at your business, what you're trying to achieve, and with this being the end of the year in 2021 right around the corner, it's a great way to get started on the year for us to partner with you to help you grow your business. So feel free to reach out to me or any of the sales directors in regards to having a marketing analysis done. We also have a 24/7 website. It's www.iamsinc.com, and the website has a plethora of things that you can utilize, whether it's sales tools, term or universal life quota that you can use. If you're an annuity agent, we do have the annuity grid available for you, as well as our long-term care product grid. And from our website, this allows you to access carrier forms, as well as going on IGO eApp Solutions to submit life applications. So if you haven't registered on our website, don't hesitate to give us a call so we can get you registered so you can utilize that website. If you have questions as far as navigating through the website, I'd be more than happy to help you with that as well. We also have a retirement analyzer that's available to help you help your clients come up with the plan for the unexpected. The retirement analyzer can help you utilize answering questions such as, can I retire safely without running out of money? How would it affect my family if I were to die prematurely? We do offer this on a 30-day free trial basis for those producing agents. We do still offer that. We pay for that for you. But if you need additional information in regards to Retirement Analyzer, do not hesitate to give us a call. We also have an IAMS wealth management team, and I think that's another thing that separates us from other IMOs, is our wealth management team is there for you to help those higher net worth clients. And it does help you, the agent, increase your revenue, improve client retention, and strengthen relationships with those clients. So if you have any questions in regards to our IAMS wealth management team, please do not hesitate to reach out to Charles Jr. He'd be more than happy to assist you with your needs there. Now, if you're familiar with IAMS, you know we do a life and an annuity academy. Right now, travel's pretty much restricted for most areas. So what we've done is, as you will see here, we've got an upcoming Ascend virtual kickoff that's scheduled for January 20th through the 22nd. The sessions are from 11 a.m. to 2 p.m. Central Standard Time. What we're going to be doing is we're going to be talking about best practices. We do have some keynote speakers, as you see here. I'm going to have a polling question for you guys here later, because if you're interested, I would say please get registered as soon as possible. I'll get you information on that because this is filling up fairly quickly. And with that, Kip, you there?
Yes, I am, sir.
All right, I am going to turn this over to you.
Okay, perfect.
There you go.
Okay. All right. Well, thank you very much, Tony, and I always appreciate you hosting these presentations, and it's always great to work with IAMS. You guys are a first-class operation, and Tony, you're just a great guy. So I hope everybody had a great Christmas or holiday, whatever you want to call it. Infinite banking. So we're going to go through infinite banking, and this is a concept that it's very powerful, and it can be difficult to get your head around. So what I'm going to do at the end of this is present you with a recommendation for a selling system that uses the infinite banking concept as its foundation. And we have had fantastic success with this system. So with that, I'm going to also just give you a little background on Mutual Trust and who we are as well. So I'll dive right in here. So I encourage you to take notes, ask questions. Tony will be taking questions, and write down some names. So let's make this useful. I know this is, I was actually surprised how many people we had on this this presentation, being the week after Christmas and just before New Year's, but I really appreciate all you guys showing up to learn something, and I want to make this useful for everybody. So please write down those names. And the infinite banking concept has been around for it's been around forever, actually, as we'll see. But the gentleman who made it popular was Nelson Nash, and unfortunately we lost Nelson last year. And he was a very important part of our business, and we are such a great fit for the infinite banking concept. And so just want to make a mention to Nelson before I dive into this and get lost in all the numbers and everything. But in any event, a little bit about Mutual Trust. We've been around for over 100 years, and we merged with Pan American at the end of 2015. That was a merger that was really textbook. They have a lot of cash. We have great growth, and we were being restrained by our growth. They needed a different domestic distribution channel for life insurance to round out their portfolio. So, I mean, it has been a fantastic relationship. I've been through, situations where companies merge and the employees get laid off and the company takes the assets, but that's not what this was. This was a merger where we actually grew our employees in our home office after the merger because they believed in what we were doing, and their philosophy about business and their culture was very much aligned with ours. And so it's been a fantastic relationship. We have grown by 15% compounded annually each year since our merger in an industry that's growing by 1%. So that tells you a lot right there. We are now part of a solidly mid-sized carrier, $6 billion in assets, $1 billion in capital and surplus. Those numbers are old. They're quite a bit higher now. We're rated A by AM Best and Fitch. The other thing that I wanted to mention before we dive into infinite banking is COVID has been terrible, and 2020 has been a challenge for everybody. But one of the things that resulted from this whole scenario is that it really pushed Mutual Trust in particular to progress, take it to the next level. And so we developed non-med underwriting, and we call it telemed. So no paramed, no fluids, nothing like that, up to $1 million in death benefit if you are 18 to 50, and the client needs to be standard or better. So that's something that we had not been doing before, and we started out with a maximum death benefit of $350,000, and then we moved to $500,000, and now $1 million. And we've had fantastic success with this. We've done it the right way. We have 60% of those who qualify initially for our telemed underwriting program. 60% are getting offers, and that is a huge number if you, as I'm sure many of you know, with these non-med underwriting programs. So I encourage you to, just take a look at your clientele and see who might be somebody that you could maybe introduce whole life to with this program, and take advantage of this very simplistic way that we have introduced, underwriting. The other thing is that while we do not have EAP, we will have EAP in the first quarter of next year. So again, I know we're playing catch up there, and we have, we've been slow to adopt it, but now we are getting it. And so we will have a true EAP. Now, in the meantime, we do have a DocuSign program that you can use to take your applications. So, you can do that all through email. We take care. Actually, you just fill out the application and then send it up over to Mutual Trust, and then we send it out and get all the signatures through our DocuSign program. So that's what we have now. But again, we have true EAP coming in the first quarter of 2021. So now what we're all here for. It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. That's Robert Kiyosaki. And I like that quote because it really encapsulates what we're doing. For us, for Mutual Trust, whole life insurance is not about death, it's about life and using those living benefits and building generational wealth. And that is what I like about that quote. That's what we're trying to do, and that really encapsulates what we're trying to do. This concept is not new. As I mentioned before, it was popularized by Nelson Nash, but there have been many who have used it in the past. J.C. Penney used it to fund their payroll during the Great Depression. Walt Disney used it to start Disneyland, and he had to tap his life insurance policy because his creditors would not give him any more funding. His family, his creditors, nobody would. So he used life insurance, and he started Disneyland. Ray Kroc used it to help start McDonald's. Doris Christopher started Pampered Chef in her garage. So, this is not a new concept. We've just helped to bring it to a wider audience. So what is the infinite banking concept? It's a financial principle based on U.S. tax laws and insurance contractual guarantees. That sounds not impressive, but those words are very important. If the U.S. tax laws change regarding life insurance treatment, this concept will be in trouble. But an important thing to remember is that if the government does change U.S. tax laws on life insurance gains, most likely it would be grandfathered in. So we're, even if you're concerned about tax laws changing, once you get individuals into this concept, they're going to be the lucky ones who actually got in and took advantage of this. Just like they changed with the MEC rules and all that, it's all grandfathered in. So we need to, as you'll see, get clients into this concept as quickly as possible. The insurance contractual guarantees are very important too, because governments can't mess with contractual guarantees. They can't change laws regarding contractual obligations between private parties once they're entered into. And just as an example of that, you can remember when the financial crisis was occurring and AIG, I think it was AIG, had paid bonuses, $1 million bonuses out to their executives. And they had received billions of dollars in financial aid and to bail them out. And everybody had a fit. And Obama came on the TV and told everybody, hey, I looked into it. I can't do anything because it was in their contract. So governments cannot mess with your contracts. And so that's another reason that this concept is so powerful. So access to capital is key to financial prosperity, and that is true whether you're an individual or a business. We need access to capital. And if you are not saving it somewhere, then you have to borrow it. But let's assume you're saving it and you're putting away some money into an account. Where are you keeping it? Is it liquid? Are you able to get to the funds when you need it? If you're looking at putting it into an account where it's a savings account or a bank, money market or something like that, you should be able to get to it unless it's maybe in a CD. Is it guaranteed? If it's in a bank, yeah, it's guaranteed. Is it taxable? Well, if you have it in a savings account, yes, it's going to be taxable, and you're probably not making much on it anyway. Is it leveraged? Meaning, is it providing any other benefits? And again, if it's just sitting in a savings account, it's not providing you with any other benefits. Will it grow if you use the money? So if you need to access the funds, will it still be growing? And that really is a part of the infinite banking concept. That is a strategy that can be used with other accounts, but the infinite banking concept has the product that we need to make the most of this concept, and I'll elaborate on that in a minute. So as I kind of mentioned, where the money is being kept. So it's being kept in CDs, money market accounts, spending efficiencies, which is just saving money and then putting it back into those money market certificates of deposit, holding it in cash. All of these accounts have limits. You're making a little bit of interest, and interest is not the key on this, not at all. You want the money to be there, you want it to grow, but the rate of return is not what this is about. So try to put that aside. This is about safety and guarantees and accessibility. and the efficient use of capital. And that's what this is about. So you can use those other accounts for this concept, but they're not nearly as efficient and don't provide near the benefits that you want. Participating whole life, that is the key to this concept and one of the keys. And it provides the guarantees that the client needs. They know the money's going to be there. And we also have liquidity. There are no surrender charges with whole life ever. And you have use control, and that's where mutual trust comes in as being a very powerful option for this concept. We are built around infinite banking. We know this business. We have trained our entire company on this business, and our product that we use for this concept is called Horizon Value, and it's built for the infinite banking concept. It provides that high early guaranteed cash value that is so important for infinite banking and making full use of it. Now, the other thing is again, I mentioned the tax treatment. You can access the funds without having any taxes or penalties. If you want to access those funds, they're going to be there, and we have no restraints on accessing those funds. We have clients who send in loan requests with their applications, their life insurance applications. And as soon as the funds settle in the policy, within the first 10 days, depending on how quick the banks can process the checks or the wire transfers, you can take a loan immediately. And so it's not just the design of the product, which is, provides strong guaranteed early cash values. The guaranteed gross rate of return is 4%. And we have the highest early guaranteed cash values in the industry, bar none. But it's also how we let you use it. And again, being able to take those loans immediately and as often as you like is another key to this concept. So if we have a solution, that's great. But if we can't identify the problem, it's going to be difficult to sell. So what are the problems that our clients are facing? Well, as I mentioned before, business owners need access to capital. We've talked about that. What about debt? How do you own your debt and try to recoup some of that interest you're paying off or using to pay off your debt and use to grow your wealth? And so that's key to a lot of businesses' success and individual families and everything success is trying to minimize the cost of debt. The other thing is qualified plans. Qualified plans are fine. They're good, especially if you're contributing up to the match, your employer's match. But how do we really win with a qualified plan? Well, you contribute money at a certain tax rate, and then the idea is to take income distribution at retirement at a lower tax rate. But we're $20, $30 trillion in debt now. Taxes are very low. Are we really going to have lower taxes in retirement? Let's reconsider that strategy. Let's take some of that money and put it into something that we know will have, no tax implications. We also have to worry about coping with emergencies. What if something happens and you need in-home care or nursing home care? What if you get sick? There are all kinds of emergencies that can come up. Life doesn't happen on a schedule. It happens when you least expect it. So we need to set aside some funds for that as well. How about keeping more of what you make? How do we reduce those transfers of wealth away from our families unknowingly and unnecessarily? How can we recoup that money? And so these are the issues that we're dealing with. And along those lines, the biggest problem that many families are facing is how do we save for retirement and help our kids pay for college? College costs is outrageous. We have our kids going into debt at ridiculous levels. How do we minimize that and then also help save for retirement. I know as long as I live, my kids are going to be in the safest cars, drive the safest cars that I can afford or our family can afford. We're going to get them into the best colleges that we can. And there are many families out there who feel that way, and they're struggling to figure out how to fix this, how to deal with the debt and the taxes and everything. And that's what infinite banking deals with directly. As I mentioned, interest is a huge issue. You have about almost 35% of every dollar that we make is spent on interest. It's a huge problem. Our country's swimming in debt. You have, car loans, you have your mortgage, and then, we're living on the majority of those funds as well. And then we have roughly 5% that we can save. And so when clients come to you, it's not, the discussion we're having is not, okay, let's figure out how you can save more money. They're already saving what they can save. They don't want to hear that. We're going to tell them how they can redirect funds into a plan that, not spending any more money than they're spending now. They're going to recoup those dollars by looking at how they fund their 401k plans, how they pay their mortgage, how they pay for their insurance. We're going to find money for them, and we're going to redirect it into the infinite banking concept. The interest rate is one part of the issue. The other is the volume of interest. I know that, car loans aren't 7% now typically. Some may be paying 7%. But just as an example, you have 30% of your car loan payment going to interest. Credit cards, 12% is probably generous for a lot of people. You have mortgages that are below 6%, but 83% of the payment is going toward interest. And I know there's different philosophies about how to handle mortgages and things like that. But just as an example of the amount of money that we can recoup, you're looking at roughly almost, over $300,000 over 20 years for a typical family. And we're not talking about how to earn another 1 or 2% on your return, on your investments. How much risk can we introduce into your portfolio before you start to hate us? We're talking about guarantees. We're talking about laying a foundation that is guaranteed to happen no matter what. And I'll elaborate on that in a minute. But that's a different story. And so if you're looking for growth, try telling a different story. And that's what we're doing with the infinite banking concept. We're putting a foundation in place to take advantage of all those other things, those investments, real estate, stocks, bonds, whatever. The infinite banking concept makes everything else they're doing in their financial plan better. And it ensures that at least this part of their plan will happen no matter what. So the other part of infinite banking is how you use the money and how you finance large purchases. So as I mentioned before, are you able to use your money and still have it grow? And that really just goes to collateralization, because if we take out a loan from a financial institution, we're losing interest because we're paying interest to the financial institution. The other thing we can do is save up money in a savings account and then take the money out to make our purchase, but then we're losing the access to those funds and any interest that it would earn. And so the third way to finance, and an important part of infinite banking, is to collateralize. Albert Einstein said, compounding is the eighth wonder of the world. So if that is true, we really don't want to interrupt compounding. We want to let that work. We want to let it grow. We want to let that asset grow. And so that's what you do with the infinite banking concept. You have a policy in place. We fund it heavily with something called a paid up additions rider. If you're not familiar with that, you can compare it to a cash account in a UL or IUL, except that with whole life, you still have all those guarantees. You have 4% guaranteed growth in the PUA rider. That's a gross rate. You also have dividends, participating rider. And so 60% of premium is going in a typical IBC policy. 60% of the premium is going into that paid up additions rider. You put in $100 into a paid-up petitions rider, you immediately have $94 in cash value that you can access. It grows by 4%, so by the end of the year, you have $96, and it just keeps compounding from there. And so you have that compound growth, and what you do is you leave that money in the policy, and you take a loan against your policy. And that's another key to this, is that we have to use the correct language. You're not taking your own money out and paying interest on it. You are taking a loan from the insurance company, from their general funds. And the insurance company, in this case Mutual Trust, puts a lien on the cash value. But the cash is still there, and it's still growing, 4% plus dividends. So we have a very competitive loan rate. It's 5%. It's a little less than that, actually, but 5%. And you use the funds for whatever you need to use them for, and then you pay that loan back as quickly as you can, because interest paid is interest lost. Once you pay interest, you can never gain it back. I don't care what strategy you're using. You're not paying yourself back with IBC, but you are using a very efficient way of borrowing and minimizing interest expense. And once you pay that loan back, your money has continued to compound, and you are in the same position you would have been in had you never taken the loan. So that's really an important part of this. So it's the product design, how we let you use it, and the strategy of collateralizing your funds. And that's all this is. It's not that complicated, but once people start diving into it, they start asking a lot of questions. And again, we have a concept that is really going to, if you want to introduce this strategy into your practice, we have a system that will really help you do that in a very successful way. So again, we have the flexibility, we have the guarantees, the gains are tax deferred and can be accessed tax free if you do it properly. You have that liquidity, access, and control. And you also have the death benefit. I mean, this is life insurance, and I don't want to forget that. And so even if, you don't live to develop your financial dynasty, you have the death benefit that will take care of your family for you. And so that's, again, and then a lot of families out there, a lot of people out there want to take care of their families. And so this strategy is really geared towards families overall. You have no fees, no red tape. It's very simple. And when you want to take a loan, you just fill out a one-page form and fax it in or upload the form to our website, and then you get your money within a week. The quick access is when the policy is initially set up. You can get the funds, take a loan against your policy within 10 days. So that just, again, is how quickly can the banks process the checks and the payments to get the funds in the policy. Who are we looking at for this concept? It's a really broad market. So basically anybody with any household with disposable income. Small business owners are really great prospects for the concept. They understand this. They understand the access to capital and compounding and everything. So they're great. Doctors, dentists, other professionals. Those individuals who just want to have a pool of capital they can access very easily and quickly. As you know, if you've ever tried to get a home equity loan, I'm sure most of us have. I have. And then they say, oh, well, we'll take care of this loan in 2 weeks. We'll get you approved. And 2 months later, you're still trying to get the thing approved, and interest rates are changing, and you have to get all these documents together, your tax returns and paychecks and all that stuff. If you just don't want to deal with that, I mean, that alone is a big part of the concept, not having to worry about that stuff. You don't need to any of that stuff to take a loan against your policy. Safe alternatives. There's interest rates are extremely low, and sometimes we just need another asset to help build, grow our wealth, and this is another way to do that. You do need to be insurable. This is life insurance, so we do need somebody who's insurable, but sometimes we have clients who are not insurable, and you can always find somebody else in the family who is insurable to use as a proxy for this concept. And they typically have a desire to protect their family, as I've been kind of mentioning through this whole thing, as many of us do. Again, you have the guaranteed premiums. They're not going to change. The guaranteed cash value growth. In particular, our Horizon Value product has the highest early guaranteed cash values, bar none. Paid up additions riders are a key part of this, and those are commissionable premiums as well. We have the most flexible in the industry. You can put anywhere from $100 up to $100,000 before we have to ask for an exception above that. You can put $500,000 up front in a single PUA. It's like a lump sum dump in that you can do. We have the most flexible policy loan provisions in the industry, and there are additional riders you can add to make sure that what you want to happen will happen. So the waiver premium and the disability benefit rider, these riders are very reasonable as far as price. They're not expensive. They are commissionable, but they're not expensive. And what they do is they make sure that even if your client loses or is not able to work, so they can't perform their occupation, Mutual Trust will pay the entire premium. If they have both these riders, Mutual Trust will fund the base policy premium and the paid up additions rider premium. And that in particular is very important because that's, at least initially, that's where a lot of the cash value is coming in. So we can say, even if you become disabled, this part of your financial plan will happen. If you have a client who has a $10,000 premium, roughly $4,000 will be going to the base policy premium, $6,000 will be going to the paid up additions rider premium, and Mutual Trust will fund all of that, even if they can't work. So think about how powerful that is. We have other advisors talking about making higher rates of return, introducing more risk, and we're saying even if you can't work, we're going to fund this substantial part of your portfolio, no matter what happens. We also have the accelerated death benefits. These are non-commission riders. They're issued on all cases, table 4 or better. Terminal illness is pretty standard in the industry. Chronic illness is becoming more popular and standard. Ours, you can accelerate the death benefit anywhere from 5% to 24% each year until the death benefit is depleted down to $10,000. So there's no fee for the rider, but we do an actuarial adjustment down if you use it. And they can use that money for anything. They just have to be certified by their doctors being unable to do 2 of the activities of daily living or suffer severe cognitive impairment. And then they can use those funds for groceries, in-home care, whatever they want. They don't need to see receipts. They just get the money. And that money is income tax free. It's acceleration of the death benefit, so they get those funds income tax free. Now, we put our money where our mouth is. We really, Mutual Trust really is about training and introducing training back into the industry because so many of us got away from that when advisors became independent. But we support the adoption of selling systems to incorporate these new concepts into your financial practice. We do that also with infinite banking. So we have special software in our illustration system that can illustrate loans being taken and repaid and all that, and different, showing retirement income coming out after that. So you can get really detailed with this. But you don't have to know how to do that because our sales development team is great at running those illustrations for you. And you just have to ask the questions. And I'm going to send over a form to Tony to share with you that has the questions you need to ask for infinite banking. You get those questions answered. You come to our sales development team, and we'll put together a scenario for you. We also have robust training. We have videos on demand that you can watch and live training such as this one that you can attend. We have some marketing materials for infinite banking and a coordinator. His name is Richard Weiserick, and he is our infinite banking coordinator and our business planning coordinator. He's a wealth of knowledge. He's a great guy, very fun to talk to, and you'd have access to him as well. We also have a law firm that we keep on retainer. And if you're working on a case for Mutual Trust, you have access to that law firm. And you can talk to them about especially complex tax scenarios and things like that. Now, to help you introduce infinite banking into your practice. We have partnered with a group called Your Family Bank, and they have developed a selling system that is simple, powerful, and repeatable. This is the single best selling system we have ever partnered with. It's new. We developed and grew with them. And as an example, I have worked with groups that were doing little business to no business with mutual trust, and they were on the verge of having their contracts canceled, and they adopted this system, and they are top 10 producers. So this is something you can adopt. You don't have to change what you're doing. You can just introduce this into your practice as an add-on, and they give you the support that you need to be successful. And so I encourage you to take a look at that, and you can talk to Tony for details on that. So I encourage you to take a look at your book of business, your calendar, individuals you may be going to talk to or meet in the next few weeks, and consider whether this might be something you want to introduce to them. Set up a call with Mutual Trust. And again, we have a sales development team that is very well educated. We have the best sales development team in the industry. I know everybody says that, but we do. And they are very knowledgeable on the infinite banking concept. So give it a try. Try it once. If it works, try it again. If you do it 3 times, then I think we have you at that point. So get with Tony. The other thing I want to mention is that we have fantastic conferences. We're going to Dublin, Ireland in 2022, and hopefully everything with COVID will be in the rearview mirror. And we have fantastic conferences. You're treated like a king and a queen. We don't have meetings. We have 1 hour-long meeting, and that's it. And the rest of the time is scheduled and unscheduled fun. And we make it really reasonable for first-time writing agents to qualify for our conferences. And not only that, but if you sign up through IAMS, we will double your credit towards achieving that conference within the first 4 months. So any business you do within the first 4 months is doubled to make it to our conferences. And so I encourage you to line up some cases and then get signed up. And I would love to help all of you get to the conference the conference for Ireland coming up in 2022. And with that, Tony, any questions I can answer? I'm happy to do so.
Yeah, it looks like we do have a couple of questions here. First question here, let me get this switched over back to me. Give me just a second. Can you see my screen?
Yeah.
Okay. All right. So the first question, sounds like you think the IRS code laws will change. Do you have any thoughts on when that might occur?
No. And, after this COVID bill came out, it just made me angry at the government. So maybe that's why I hit on that so hard.
Mm-hmm.
No, there is no insight. We just know they're always trying. They're always trying to do that. But no, there is no indication that they have had any success of any kind in that regard.
Okay. Next one, how do you avoid a MEC on a single pay situation?
The infinite banking concept is not really built for single pay scenarios. The only way that does work is if you have money coming from another non-MEC cash value policy. The cool thing is that money's already tested, so you could dump like any amount of money into a single premium from a non-MEC policy, and then you could use those funds for the infinite banking concept. But if that money is coming from a savings account or a CD or anything like that that's not MEC tested already, we're going to spread that money out. We're going to put in, a certain amount over, preferably at least 7 years is the ideal. So yeah, that's how we handle that. This is typically is not for MEC policies.
Okay. Then I have another one. Does your software model people's current debt situation and their real amount of debt for using infinite banking concept for debt reduction?
Ours does not, but the selling system I reference does. And so that's why that's another reason it's so effective. Yes, it does that, but our software does not do that.
Okay.
Well, we can show you our loans and scenarios for loans, and that's it.
All right. Then we have, is Mutual Trust Life a direct or non-direct policy? Also, do you sell in New York?
We do not sell in New York, unfortunately. We are direct recognition, but when you factor in the loan rate with our very low recognition factor, it's a wash, or we even come out ahead. So there are some, as I mentioned, our rate is 5%. You have other groups or other carriers, their rate is up to 8%. Our recognition factor is extremely low, and so you factor all that together, and it's still 5% for our loan rate. So that's not an issue.
Okay. It looks like we're at the end of the questions, so I have a couple of polling questions I want to give to the group before we end our webinar today. First polling question that I have is, if you would like additional information in regards to the topic that we discussed today, go ahead and respond here and make sure to get that information out to you. And it looks like we got quite a few that want additional information, so that's always good, Kip.
Great.
All right, now I'll leave this up for a few more seconds, then we'll close this one out. Give everybody enough time to respond. Looks like they have. Next is, if you're not appointed with Mutual Trust and you're looking to get appointed with them, I have a polling question here. If you could respond, make sure to get that taken care of for you as well. I'll leave this up for a few more seconds. All right, looks like everybody responded there. Last polling question, it mentioned about our Ascend Virtual Kickoff. That's coming up in January. If you're interested in that, want more information in regards to that, I've got a polling question for you there. Make sure to get that information out to you. If you're looking to get registered, I'll get that out to you as well. So I'll leave that up for a little bit. Okay, looks like we've got everybody to respond to that. All right. So if you guys have any additional questions, like I said before, my name is Tony Butler. I'm one of the life sales directors here. As you see here, my email address is tony@iamsinc.com. We also have two other sales directors who are in our Topeka office, Justin Ford, and his email address is justin@iamsinc.com. Justin is new to the team, awesome guy. And then we also have Jess Riley. A lot of people say Jesse, but it's actually Jess. His email address is jess@iamsinc.com. Any one of us would be more than happy to answer any questions that you have. As you see, our toll-free number here is 800-255-5055. Any final thoughts, Kip?
Yeah, Tony, just thank you again for hosting this. And as always, it's a pleasure to work with you and IAMS. And I encourage you, all of you who are listening, to try something new. We're not trying to steal your business away from another carrier. We're trying to help you find organic growth, and this is a concept that can do that. So I encourage you to take a look, learn about it. You don't have to change what you're doing. You just need to add a few questions into your discussions with your clients. And so hopefully we do that, and I look forward to working with any of you and getting you to that conference in Ireland as well. So thank you very much.
Hey, Kip, thanks for taking time out to do this webinar with us. Thank everybody for attending, and please, everybody, have a happy and healthy new year. Look forward to working with you here in 2021. You guys take care. Bye.